Congratulations! You are officially under contract and you're on your way towards the closing table and owning your home. So what's next? If your agreement is to provide an earnest money deposit, you'll need to do that as soon as possible. It's due what is known as immediately, according to the Louisiana buy-sell agreement, which is now your accepted contract. So you need to turn that in as quickly as possible, hopefully within 24 to 48 hours. Beginning the day after you're officially under contract starts that clock ticking towards the inspection and due diligence period. And during this time, you have the right to cancel the contract if you discover something about the home that you don't like. So right away, you're going to want to choose your home inspector and termite inspectors and get that ball rolling to schedule those important inspections. Depending on how busy the inspector is and the market, it can take up to a week at certain times to even get an appointment, and that's eating away at the due diligence time period. And you do have the right to have anyone at all that you choose to have inspect the property. Now, before the inspection deadline arrives, you take the information found during the inspection period and ask the seller to make certain requests if necessary. For example, let's say that there's a leak found under a sink and the seller didn't notice it, so they didn't disclose it, and you didn't see it when you went to view the home. So the house isn't actually in the exact condition that you thought it was when you and the seller agreed to price and terms, right? So what do you do about that now? Well, you just ask them to repair it. You ask the seller in writing to repair the leak. And we have a form specifically for making these requests, and that's the buyer's seller's response to inspection form, where you're going to ask the seller to make any needed repairs that weren't apparent to you when you first saw the house. Once that form is submitted to the sellers, they have 72 hours to respond to that request. And they're likely going to do one of 4 things. Now, first of all, they may agree to do everything asked for. If so, count yourself lucky. That is a great situation to be in. Now, second, they may agree to do some things asked for, but not other things. And a third option might be that they offer to have some monies held out of their proceeds from the sale at the closing table. So then you go ahead and go back and send your preferred contractor to have the work done after the closing has already taken place. Now, this can only be done if the repair isn't something that would cause the lender to decide not to lend with the home in its current condition. And lastly, they may not agree to do anything at all. Once they respond back in writing, now you have 72 hours to decide how you want to proceed. You can accept their response and move forward with the sale, which is ideal and which is what happens in almost all occasions. Or you can decide you don't want the house any longer and you can cancel the contract. This is not breaking the contract. You have the right to cancel at that time and still get your deposit back if there is one. Now, another thing that you want to take care of during the inspection and due diligence period is getting quotes for homeowners insurance and flood insurance when flood is required. Your insurance will be added to your mortgage payment. So this is the one area where you have some control over that monthly mortgage payment by shopping around and getting the best rates on insurance. Since that insurance is added to your mortgage payment, you want to make sure it's comfortably affordable to you. If it's not, but you don't realize that till after the inspection and due diligence period, you would be defaulting on the contract if you back out at that time. Now that we've covered some of the things that you're going to need to be doing, we need to have a serious talk about things that you absolutely must not do during this time. Absolutely do not make any changes to your job of any kind without talking to your lender first. If it pertains to your employment at all, be sure to talk to your lender, whether you think it's important or not, just to be safe. You'd rather be safe than sorry. Because it's important to understand that the lender based the approval partly on whatever your employment is, and they will be re-verifying that right before the closing. So if anything changes and it wasn't your choice, be sure to talk to your lender about it as soon as it happens. Now, don't go making any large purchases either, like buying a car or furniture, and whether that's financing, using a credit card, a debit card coming out of your checking account, no matter what form of payment, unless you have that money to buy whatever it is, actual cash in your hand that you did not pull out of your bank account, don't make that large purchase without just first talk to your lender about your intentions. And it may be perfectly fine. It's different in everyone's case. So we want to discuss it with the lender just to be safe. The lender looked at your credit card balances and your bank account and approved you partly based on what they saw there. So now any changes could turn your approval into a denial, and we definitely don't want that. While we're on the topic of bank accounts, don't make any large cash deposits either, or change bank accounts, open a new bank account, change banks. Don't do any of that. And also be sure that you don't spend the money that you've got set aside for any down payment, closing costs, or any expenses that are related to buying your house. The lender is going to be looking at your bank account activity, again, the day of or a day or two before the closing. They need to see that money is sitting right there in your account. And if there's been a large cash deposit, that will throw a wrench in the works for sure. You'll have to provide a paper trail of where that cash came from. And I'm telling you, it can be a really big ordeal. So please don't deposit any large sums of cash. Don't apply for any new credit cards of any kind or let anyone else other than that lender pull your credit at this time. And that includes co-signing for someone else's credit. Definitely don't do that. Also refrain from using the credit cards that you already have right now. Be sure that you're paying all of your bills on time and don't let anything get paid late. Again, the lender is going to be looking at your employment, your income, your credit, and your bank accounts right before the closing to re-verify everything. So it needs to be pretty much the same as it was when you applied. They don't just look at it that one time when they first approve you. They're going to look again right before the closing. We definitely do not want to find out suddenly the morning of closing when you think you're moving into your new home that you actually no longer qualify for the loan and you will not be buying a home after all. This is an absolutely devastating experience, and it does happen, and I don't want it to happen to you. So we've got some work to do over the next 30 to 60 days getting you into your new home. If you have any questions after you've watched this video, please reach out to me for clarification. I'll talk to you soon. Bye.